Hello, everyone, and welcome to another edition of the Forex Technical Market Update for August 18th, 2015. And yes, the markets are still very much in consolidation. The euro is down on the morning slightly at 110.63. Now, the news that is playing out right now is the fact that the British pound is doing fairly well so far on the morning and wants to break out of this consolidation pattern. Now, we have been speaking for some time now about the consolidation up at 156.90, the high of 156.90. The market has traded up to that level a number of times: one, two, three times, four times, five times, six, seven times, and has failed all of those times. And now the market, as we speak, is attempting to break out of this level. But keep in mind that this market can easily snap back. Yes, it is. It's looked like it is closing above the line at this point in time. But remember, this candlestick has not closed as yet. So we have to wait until the close to see if the market is able to close above this level on the 4-hour time frame. On the hourly time frame, we see that the market has closed above the level, the 156.90 level. But we want to see a close on the 4-hour time frame, because we see that on the 4-hour time frame, the market has always traded up to the level and has reversed. And we could be in a situation where the market will reverse or the market will continue upwards. Now, another thing to look out for with this market is that weekly resistance is at 157.14. And oftentimes when we have the weekly resistance above the level, the critical resistance level, that could act as another area of where sellers are placed. So that could impede the market further. So we'll keep an eye out on this British pound to see where exactly it does close. If you see a close above 157.20 up to 157.30, that would be fairly bullish for this market. Okay, so naturally the British pound is trying to break out. Taking a look at the British pound Japanese yen, we're up on the morning also, and the market looks like it wants to challenge the all-time high near this 196 level. High is 195.84. We're currently at 195.02. So we'll see if the market can close above this high that was made in June. Taking a look at the Japanese yen, this is a market that has almost seems like it has fallen asleep. Market is up one day, down one day, up one day, down one day, and we are currently trading to the downside slightly at 124.28. Support is at 123. We have a minor swing low here at 123. We also have a support level at 123.80. Two minor support levels, and the resistance is up above 125, where this market seems to always pull back near this 125 level. And critical resistance is up at this old high near the 125.80, 125.90 region. Okay, taking a look at the Australian dollar this morning, we see that the US dollar is performing pretty well against the Aussie dollar. We see that the market is down, but if you take a close look on the 4-hour chart of the Aussie versus the USD, we see that we're very much in consolidation again. These are the boundaries of this market. The market is in a channel consolidation pattern, and in channels we could see the market just meander within the price band. Taking a look at the Canadian dollar, market remains above critical resistance in this 130. Actual high is at 130.64. We draw the red line. And the market still is trading above that 130.64 level. If we see a close above this level on the monthly basis, we could see further gains in this market. It just depends on how well this market can follow through, if this is indeed a break of the important level on the Canadian dollar. Okay, so that in a nutshell is what's happening with the currencies. Taking a look at the British pound, we see that the market is pulling back as we speak here, and it's definitely important that this market closes above this 156.94 region, and we're on a 5-minute chart. We're pulling back. Okay, now another thing I want to speak about is the idea of quitting. I see a lot of folks attempt to trade the forex market and trend. They buy courses on the market, etc., and then after a couple of weeks they just quit. I can tell you, and I will try to encourage you, that when it comes to trading, quitting is not something that will result in positive gains. That is in life, but even more so in trading, because if you tend to be a quitter, you tend to buy courses and immediately just refund. There are folks out there that just buy stuff and just refund like it's a t-shirt. You will find that when you enter the markets with that mentality, when you start to trade the markets and when you enter the markets, what will start to happen? When you enter a market, can you just go ahead and just refund a trade? No, you have to stick with the trade and you have to stick with your trading plan. And while there are a lot of courses out there that are no good, there are also some very good trading courses. If in my library, I have quite a number of courses about trading. I've never returned a course about trading because I've learned from every single course. And that's how you build up your knowledge on the markets. You don't build up your knowledge by spending $90, $100, $200 and then immediately wanting back the money. That is definitely not how you build up your knowledge. Because as I said, in the markets, it's something that you have to be disciplined to stick with your trading plan and stick with your system. So if you have that mentality, I encourage you to work on yourself and work on how you can stick with things more often, how you can see things according to plan and see things through, because it will greatly enhance your ability and your profitability in the markets. Another skill that you should develop is this idea of patience. If you are a very impatient person, the markets you will not see consistent profits in the markets, because the markets they don't really march to your beat. It marches to its own beat. And you will find that folks, when the markets are moving slowly, folks get impatient and make rash decisions. They get impatient and they also get uninterested in the markets. And normally the slow times are the times that you should be looking for profitable opportunities and just waiting for the market to move. So that's a bit of advice I have for you today. It's something I see quite often in traders, and it ultimately would not result in you being consistently profitable. Okay, if you would like to have these signals sent to your trading account automatically, you can click on the link below to get started. Remember, when you sign up with our signals, the whole idea is to have an avenue where you can be profitable over the long run. Over the next year, 2, 3 years, you could see something that, okay, this is definitely a good investment because each year I'm able to make and turn over my money. That is the whole point of the trading signals. So click on the link below if you want to get something that is well managed and looks out for your interest as an investor. Thank you very much for listening, and I hope you have a wonderful day.